All right. Next up, we have the one and only Christine Sandler. She is the head of sales and marketing at Fidelity Digital Assets. I believe that she's here. Christine, if you can hear me, can you turn your camera on and perhaps your microphone as well?
You bet, Neil. I was patiently listening and learning from Nick and Matt as well. So,
were you taking notes?
All the time, all the time.
Yeah, I ran out of space. It was a very info-packed session. I know that you mentioned in the chat that's going to be a tough one to follow up, but I think you just might have what it takes to do it. So before we get into it, Christine, can you tell the folks at home a little bit about your background and how that's connected you to the space that we're talking about today?
Yeah, sure, happy to. So I started in the business many years ago. So pre-crash, the big one, 87, economics graduate. And the only place for me to go was Wall Street. And my ambitions were that I wanted to become a trader. And I traded on both the buy side and on a proprietary basis. And, I came to a point in my career where my family, I had a family obligation. My husband was transferred to Toronto. So I left the business for about 18 months. When I came back, trading had already begun to change. And so I came to the conclusion that I would probably be fighting for a seat and not actually a better trader based on those changes. And so I ended up going to work for Bloomberg, and Bloomberg intelligently put me in their electronic trading division in 1998. So here I was, a former trader selling trading technology to hedge funds. And lo and behold, I was somewhat successful. And around 2000, I had a child. And my decision was, look, this is a fun job. This is great. But if I'm going to leave this child home, I'm really going to have, I'd like to work for someone that's going to have a meaningful impact in electronic trading. Because I felt that electronic trading, we were on to something. So I ended up going to work for Archipelago, a startup based in Chicago. Lots of ex-traders and lots of ex-Wall Street people looking to kind of change capital markets. And I was there for 6 years. The business that I ran for Archipelago was spun off and sold to Merrill and became the basis of their electronic offering. In 2006, I entered Merrill as an MD. I was there for a year, ported the business and the 25 people that worked for us. And then left after a year. I ended up rejoining the rest of my team at the New York Stock Exchange and was hired as part of kind of a management shift, and was lucky enough to be part of that organization through the crisis. So joined in late 2007. In 2008, obviously, we know what happened, but it was an incredible vantage point to see some dramatic changes within capital markets. I was ultimately global head of sales, reporting to the CEO, part of the management committee, and chose to leave after we were acquired by the Intercontinental Exchange in 2013. I did one more stint at a bank. Worked for Barclays from 2014 to 2016, and that was enough for me to leave traditional finance. I retired for 2 years. And thought, look, what's next? When was I happiest? And I was happiest when I was surrounded by very smart people who were working on complex problems. And I sought to find something like that. And sure enough, I found that in what I classified as the very dysfunctional markets of digital asset trading. So I looked at these markets and said, wow, they're really homogenous. They're, very volatile. Perhaps something I've learned in the past could be applicable to these markets. And then ultimately went down the crypto rabbit hole. Joined Coinbase in March of 2018, was there for a year as head of sales, and then moved to Fidelity Digital Assets, where I'm responsible for sales and marketing for our digital asset business, where we focus on an institutional client exclusively.
Okay, great. So that leads me to my next question. So we know you're selling something, and you're selling it to those institutional folks. How exactly is Fidelity playing in the crypto markets?
Yeah,
What does
so
that look like?
great question. So we are single asset only. Our focus is Bitcoin. It's 90% of what we, hear from clients. As I said before, our focus is exclusively institution, and that ranges across from all institutions. So very long duration players like pensions and endowments, all the way to hedge funds and family offices as well, and anything in between. We also focus on the crypto native segment, so crypto hedge funds, miners, and also other projects in the space, whether they're payment providers. We provide custody services and execution services as well. Our platforms are fully integrated as well. So if you have balances with us in custody, they're available to trade on our execution services platform.
Interested, I have a very specific question coming in from chat, but I'd rather just broaden it a little bit. Could you give me an overview of the institution's geographical coverage that you're working on?
Great question. So primarily North America. We do have some institutions in South America, and we also have we're in the process of FCA approval for Fidelity Digital Assets Limited, which is our London-based institution that focuses on Europe, the Middle East, and Asia as well. So we are we have a large geographic footprint, primarily North America at this point, but Europe is growing dramatically. And as a matter of fact, I'd be remiss if I didn't mention that every year we survey hundreds of institutions as to their sentiment around digital assets. This year, we expanded that survey to include Europe, and quite honestly, we were all astonished by the numbers. The numbers out of Europe were even stronger in terms of sentiment and exposure for digital assets. So we're really grateful to actually have gotten that head start and to be active in those markets as well.
Which market has the most bullish perspective?
It was throughout Europe and equally balanced between London and continental Europe, but the numbers were, survey results can actually be seen on our website if you'd like to see the survey. But it was curious. We always think about the U.S. leading in terms of sentiment. Perhaps the U.S. led, but Europe really picked up the ball and ran with it.
Really cool. Okay, so recent OCC announcement regarding banks being able to custody crypto. How does that impact what you're doing over at Fidelity?
Neil, great question. And honestly, we were also very fortunate because we'd recently announced that we did a sub-custody deal with an existing custodian in the space. So it was our first foray into having another third party use our technology to sub-custody their Bitcoin assets. We announced that deal, and then literally a few weeks later, the OCC made this announcement that said, look, banks are able to hold digital assets on behalf of clients. And we viewed that as kind of a really, like the last link in the chain of a really nice progression of constructive regulatory dialogue. So there were positive statements coming out of the CFTC. There were also, there were things that were kind of continuing to chip away at some of the really substantial obstacles that were holding institutions back from investing in the asset class. So if you look at the big broad obstacles, obstacles were regulatory uncertainty, lack of trusted intermediaries, and then finally that potential career risk of, well, what if I invest in this and it goes to zero? And then you have luminaries like Paul Tudor Jones saying, look, I find value in this asset class as part of my overall portfolio. So that global macro narrative around fixed supply, uncorrelated assets was really beginning to take hold. So the OCC announcement could not have come at a better time. And also for us, since we had already looked at this part of our business and said, we have an opportunity to potentially sell into other financial institutions. It came at a great time. So we are working with other financial intermediaries in a number of capacities around things like sub-custody, things like custody as a service, where the end client is potentially opaque to us and we interface with that financial intermediary, where they're leveraging or they're building a digital asset business using our technology.
That is interesting. So as all of these things are coming together and opening these doors, I'm interested in your perspective on which adoption trends you're seeing. This is a question that I got to ask on the last one. I got some really interesting answers, but I'm very interested in which adoption trends you're seeing in crypto, Christine.
This is an excellent question. So we continue to, so look, I think one of the things that's really been a great surprise, and that's been a trend that's been in place since kind of the Fed began to aggressively print money, is this need for the desire for fixed supply on correlated assets. So clearly anyone that's bought into the value of gold as a to diversify their portfolio can also really grasp the Bitcoin narrative of Bitcoin as an emerging store of value. And Ria, who was on earlier, wrote a wonderful piece around Bitcoin as an emerging store of value. That narrative is really taking legs with family offices, ultra high net worth individuals. So we're seeing a number of registered investment advisors come to us to help them accommodate their clients. But the narrative is, they're folks in my demographic. So one would think definitely there's, a young demographic within digital asset adoption. There's now a slightly older, more mature demographic that's adopting digital assets as well.
Well, that is wonderful news. So tell me about the roles that institutions play in crypto markets and how you see them. We're going to play this game where we talk about time horizons. We've already touched on the recent announcement, but what role do you think institutions will play in crypto market shifts in the short term?
So in the short term, I do think you're going to see more banks and more traditional financial intermediaries enter the space. I think most of them were reluctant to enter the space. They had blockchain and digital asset experts in-house, implemented proof of concepts, but really stayed away from trading and custody of digital assets. I do think that you're going to start to see that. One of the things that I think is a really important trend is the growth in derivatives. I saw a tweet today that someone had around CME's trading more volume than Coinbase, or Bactus trading more volume than Coinbase, but suffice to say, the growth in futures and the growth in options has been really staggering. And when you start to see that underlies an institutional trend, and that really does support an institutional trend. It's really not the retail players that are dabbling in futures. It's an institutional construct. When institutions come, they require intermediaries, and they encourage intermediaries to help support them in those endeavors. So my expectations are you will see more institutions entering the space. The other thing is also there's some margin in digital asset trading, custody, lending, and that probably hasn't gone unnoticed.
Interesting. Okay, so let's take those and let's stretch it out to about 5 years from today. So we'll call that midterm. What does the institutional role in the crypto markets look like?
I think it's very broad, and I think it depends on the footprint of the clients that they have. So whether they're a private bank and they're serving wealthy individuals, I do think that they look like they will be offering trading and custody services across a spectrum of digital assets. Some of those assets may be classified today as securities, but I do think we will see the tokenization of lots of different assets, or the digitization of lots of different assets. I think we from traditional finance look at this as a very good opportunity to kind of broaden ownership of illiquid and liquid or other assets. It's I think that's a potentially wide open field, and that's something that's very well suited to existing financial players to be
All right.
involved in.
Okay, so that's good. And now I'm gonna put us at risk of exhausting the point, but I am interested in your wild, big, audacious vision for 10 years down the road. What does our new crypto utopia look like from the institutional side?
Yeah, so that's a really great question. 10 years. It's hard for me to think in 10-year segments because I'm so old. But in 10 years, I do think you will see, we talked about it, I talked about it the other day as part of a discussion around stable coins. I do think you will see fiat and digital assets trade on similar platforms where there's almost a fungibility between fiat and the digital assets. It's really a potentially freeing thing. You're not seeing also, and Nick and Mac talked about this with respect to the growth of stable coins. You could see a consolidation under mega fiats that tie back to stablecoin infrastructures, and so we could see some major shifts with respect to the exchange of money and the exchange and commerce built on the backs of digital assets. It's pretty cool.
Yeah, that is very cool. So we are looking forward to that future, and it's really cool to have all of you guys on here. Christine, you are certainly included in this, taking part in building that future. So sticking on that topic of this cool stuff, to you, to Christine, not to Fidelity, to Christine, what is the most exciting development that's happening with institutions in crypto right now?
I think the most exciting thing, and the most exciting thing is, I think there are a lot of great managers in crypto that are running portfolios that are absolutely crushing it. So you look at traditional hedge fund managers, and maybe they're up 20%. There are digital asset managers that are up 130% this year, like absolutely killing it, and pretty much under the right. They're not household names. It's absolutely incredible. So they've taken this wonderful asset class and they've stitched together an ecosystem that allows them to truly outperform on a global basis. That's something that's absolutely phenomenal. So it's my hope that organizations like Fidelity can help those institutions grow and attract additional assets, because they're certainly worthy.
That is insane.
Mm-hmm.
I had to Google that after you said that.
It's
confirmed.
crazy.
She's telling the truth.
I am.
That's nuts. Okay, so some more open-ended stuff. Is there anything you wish that you would have realized about digital assets earlier from an investor standpoint?
Oh, amen. Seriously. This crazy crypto stuff. It seemed to me too hard to acquire the asset, or not worth the trouble. I guess I'm just lazy. I wish I had not been so lazy, because so many. The other thing is also, Neil, I have to be intellectually honest. As a trader, I probably wouldn't have stuck it out. I probably would have been like, oh, it's up 200%. I should sell it. But I look back and say, wow, that was a missed opportunity. And I wish I had been involved. I wish I had listened to my gut and been involved early on, much earlier on, and didn't have stress around, wow, this seems to be too hard. I don't know this intermediary. I don't know who this exchange is. I don't want to put in my social security number, all of that. So I wish I was a little less squeamish and a little more adventurous. That's
You and me both.
right.
You and me both. There was that early on sort of branding issue, establishing trust with the investors. But I think that you are sharing the same sentiment with pretty much everyone in chat right now. I don't know, maybe if there are any Bitcoin billionaires in chat, let me know. Drop it in chat. Okay, so let's talk about the past year. We know that the past year has been essentially boring and uneventful. I'm wondering if crypto might stand out and have any moments that you would consider exciting, and if you could tell us what they are.
Oh, look, I think actually, let's talk about boring. One of the things that institutions don't like is that volatility.
Mm.
Is volatility a feature or is volatility a bug? For many institutions, they kind of push back on, wow, it's too volatile an asset. It's been pretty boring. Like trading has been pretty boring. I mean, I would say Bitcoin trading has been pretty stable. So we love to see the tamping down of volatility as well.
Mhm.
But to answer your question, I think you will see some particular partnerships and endeavors where large players are begin to bring together elements of the ecosystem to ease frictions for lots of different clients. And so stay tuned for news. So stay tuned for news from us. Yes, it's a forward-looking statement, but we're diligently working with other participants in the marketplace to really work on the overall ecosystem. So we do care about our clients and we care about Fidelity, but more importantly, we do care about our impact to the overall ecosystem.
Yeah,
So
I love that. I can tell that's deeply important to you.
it's good.
So okay, so you foreshadowed for a moment there. Can you tell us about Fidelity's future plans? What do you guys have in store for us? That's very exciting.
So when we think about future plans, we've always said that we're institutional only. We've always said that our goal is to have a full service brokerage offering. And whether that full service means, dedicated support, it's clear that we still have product and an offering to build, to fill those gaps and to really create the most robust institutional offering. Expect us to announce things like, the beginnings of a borrow and lend product. Expect us to participate in building out that ecosystem where it looks a lot more and meets the standard of traditional assets within crypto. So think about the services that a prime broker offers. We want to mirror those services and apply them to crypto.
Very cool. Any idea of the time frames on those?
We'll see. I hate time frames. They always, we'll see.
Yep.
Yeah. But I respect you for asking, Neil. I respect you for asking.
I appreciate it. So on the institutional space and its relationship with cryptocurrency, are there any thoughts that you'd love to share with our audience today?
I think, you'd be surprised. I think that the institutional sentiment is stronger than you might think. We focus on the very traditional side. So we focus on essentially folks that are new to digital assets. Granted, our name is also we are a traditional player, so we do have some credibility there. But we are seeing adoption across all facets of the institutional space. As I said before, from pensions all the way down to ultra high net worth individuals and family offices, registered investment advisors, hedge funds, both digitally native hedge funds and traditional hedge funds, and across multiple strategies. So it has really been an exciting year for us, and it's caused us to think about product development vis-a-vis those specific segments, and it's caused us to think about ways in which we can help continue to ease frictions for institutions that are looking to adopt digital strategies, and also to serve those that are in the ecosystem as well. So it has been a great year. really has been exciting for us.
That's great. And it's interesting to hear you talk about the early days where it was difficult for you to perhaps find a way to get into crypto, and there was friction present that made you hesitant to do so. And here we are today where we're identifying friction and a lack of ease of use is one of the main impediments, both for institutions and for the retail folks out there to get in. And here you are with Fidelity talking about a future where you're getting rid of that remaining friction. And it's really fantastic to hear that. If you're willing to let me throw you to the wolves for a moment, I would love to pull in some questions from chat.
Okay, wolves. Okay.
So guys, can you tone it down? I'm not big on cryptocurrency, and you guys are using way too many big words on me. Okay. So this one actually makes sense to me. How do you compare Fidelity to Prime Trust in terms of custodian?
Look, I think Fidelity's custody product is institutional only. I'm not as familiar with Prime Trust and their client base. I think from our perspective, we the attributes of our custody platform that I think are most relevant to institutions are the fact that we are fully audited. So we have audits in place for both our custody solution and our execution services platform issued by a Big Four, which is non-trivial. And this is something that that institutions really do require. And what that means is they've looked at our policies and procedures, and more importantly, they've witnessed those policies and procedures in action, and they've noted that we've adhered to those policies and procedures. So it's not just only that we have them in place, but that we're adhering to them in practice, and that's non-trivial. I'm not sure of their audit status, but I do think that that's something that really resonates with our clients. I think also, so we're single asset. They may have they may offer multiple assets. And I would say our minimums are probably a little higher than Prime Trust. So since we cater to institutions only, we do have higher minimums. And we also have a fairly rigorous due diligence process for our clients as well.
Yes, that's fantastic. I'm sure that that's a significant advantage and a huge focus is the regulatory compliance and how you approach that. That is huge. Okay, guys, let's see. We got time for, let's just do one more quick one. Let's just make this a yes or no. Any murmurs or anything that's actually in place about moving into relationships with Middle Eastern institutions?
Not yet. So what we typically do is we either work with inside counsel or outside counsel to judge whether we have the necessary regulatory structure in order to be eligible to have clients in that region. In terms of the Middle East, we are exploring the Middle East. We don't have any clients in the Middle East yet, but we do have, but we are in discussions with clients in the Middle East. So we have no clients on platform in the Middle East. But the regulatory landscape does differ significantly from country to country and from region to region.
Yep, and compliance is very important as we're developing products for different customers. So thank you for that question. That's the last question coming from the Wolfpack, the chat. Where can folks learn more about Fidelity and get in contact with you, Christine?
That's great. Neil, you can just have them take a look at our website where they'll see Ria's fabulous research. And there's also an interest form if they'd like to reach us as well. We're also active on social media as well as LinkedIn, and we'd love to hear from you.
Yes. Plug the Twitter. Everyone, follow.
Plug the Twitter.
Plug the Twitter. Always plug the Twitter. If you guys notice, my Twitter is up on the top. Follow me. I'm at 161 followers, trying to get to 165 by the end of the week. Christine Sandler, it's been fantastic having you on here for the institutional perspective on what's coming down the line. Very interesting stuff. Christine, we hope to have you at a future boot camp on cryptocurrency, and I hope you have a good weekend.
I would love that. Thanks for having me. Great lineup. And I think Flory is the only one holding everybody back away from the bar. So
She's
have a
holding me back.
wonderful weekend. Exactly.
All right. Thanks, Christine.